What if your money could pay you while you sleep, even if it starts small like $5, $20, or $100? Most beginners think passive income needs a big budget or a big business. It does not. You need a simple system that you set up once, then keep running with little effort. In this video, you will learn 5 passive income ideas that beginners can actually start. The first 3 are low effort and beginner friendly. The last 2 can grow bigger over time, but they need a bit more learning. Passive income only works after you take action. So grab a notebook and let's start. 1. Earn monthly income with a cash ETF. This is one of the simplest ways to start earning passive income as a beginner. A cash-focused ETF is designed to stay stable in price, around $50 per share, plus or minus a few cents. It is not built for big growth. It is built to park money safely while paying you regular cash distributions. Think of it like placing your cash into a basket of high-interest savings accounts instead of leaving it in a low-interest checking account. The big benefit is calm. You are not dealing with big price swings, so it feels easier to stay consistent. Now, let's talk numbers. In the example you shared, this cash ETF pays about 2.52% and pays monthly. If you invest $300 every month, your deposits alone become $3,600 in 1 year. With the monthly payouts added, you could end up closer to about $3,900 after a year, depending on payout timing. This works well for beginners because it builds momentum. You do not need to time the market. You buy, you hold, and you collect monthly income. If you hold in a TFSA under Canadian rules, that income can be tax-free, which makes the results stronger over time. Simple setup. Open a brokerage account. Fund it. Buy the cash ETF. Then automate your monthly contribution so it stays passive. 2. Start a zero-cost print-on-demand store. This is one of the most beginner-friendly ways to build passive income without holding inventory. Print-on-demand means you create designs, put them on products like shirts, mugs, and hoodies, and sell them online. A print-on-demand company prints and ships after someone orders, so you do not handle products yourself. This removes the biggest business risk for beginners. You are not buying stock up front. You are not stuck with unsold boxes. Your work happens up front, then the store can run in the background. The example you shared gives a clear profit idea. If the platform charges around $11 to $13 to make a t-shirt and you sell it for $30, you can earn around $18 profit per sale before marketplace fees. Even if fees reduce it, the model stays simple. The customer pays. Platform takes base cost. You keep the difference. To make this work, focus on a specific audience. Gym designs, study quotes, cat lovers, coffee lovers, office humor, travel lovers. Simple wins. Use clean text, simple layouts, and clear messages. You can create designs with free tools like Canva. Set up your shop once. Upload your designs. Write good titles and descriptions. Set your prices. Then let it run. You may not make money every day, but even a few sales per week can stack into real extra cash over time. A smart beginner plan is to start with 5 designs. Post them. See which one gets clicks. Then make more like the winners. 3. Earn interest with a high-interest savings account. This is the most overlooked passive income method, and it is also the safest. Many traditional bank accounts pay extremely low interest, like 0.03% per year. That is almost nothing. A high-interest savings account can pay around 2% to 4%, and one example you shared mentioned 3.1%. Here is the difference in real numbers. If you keep $10,000 in a traditional account, you might earn about $5 in a year. If you move that same $10,000 to an account paying 2.5%, you could earn around $250 in a year. You did nothing extra. You just parked your money in a better place. This matters for beginners because it builds a strong foundation. It is perfect for emergency funds and short-term goals. It also trains you to respect small gains that grow over time. Make it passive by automating deposits. Set a weekly or monthly transfer into that savings account. Even $25 per week matters. As your savings grow, your interest grows too. It is quiet progress, but it is real progress. Now, let's move to the 2 methods that can grow more over time. They still can be passive, but they require basic investing knowledge and patience. 4. Build dividend income with high-yield dividend ETFs. Dividend ETFs can pay you income regularly, often monthly or quarterly depending on the fund. A dividend ETF holds many dividend-paying companies in one basket. When you buy it, you own small pieces of many companies at once, which lowers risk compared to picking one stock. The example you shared mentions a high-yield dividend ETF like VDY with a yield around 4 to 5% per year. That means if you invest $10,000, you could receive about $400 to $500 per year in dividends without selling anything. Unlike a cash ETF, dividend ETFs can move up and down in price because they hold real stocks. That is normal. The goal is long-term income and long-term growth, not quick wins. The key to making this passive is automation and reinvestment. Many brokers offer DRIP, a dividend reinvestment plan. Your dividends automatically buy more shares. More shares can mean more dividends later. This is how income can grow over time without extra work. A simple setup is this. Set up auto deposits each month. Buy the dividend ETF on a schedule. Turn on DRIP if available. Then check once a month to confirm everything is running. If you hold in a TFSA under Canadian rules, those dividends can be tax-free, which helps compounding. 5. Build long-term wealth with capital gains using automation. This is how many people build real wealth. Capital gains means your investments grow in value over time. You buy something today, it grows over years, and later you can sell for more than you paid. The difference is your gain. Beginners often think investing means checking markets daily. That usually leads to stress and bad decisions. The biggest beginner mistake is trying to time the market, guessing the perfect time to buy and sell. Most people cannot do that consistently. A more passive approach is to focus on time in the market, stay invested long-term, and let compounding do the heavy work. The strategy you shared is dollar cost averaging. You invest a fixed amount on a schedule, like every month, no matter what the market is doing. Some months you buy at higher prices, some months lower. Over time, you average your cost and reduce stress. A beginner-friendly way to do this is to buy a broad market ETF that tracks a large index, like an S&P 500 ETF. You are not betting on one company. You are buying a small piece of many of the biggest companies. Here's a passive setup. Open a TFSA if you qualify. Set up automatic transfers from your bank to your brokerage. Set up automatic monthly purchases of your chosen ETF. Check once a month, then leave it alone. This method feels boring, and that is the point. Boring is what makes it sustainable. How to choose the best one for you. If you want the simplest starting point, begin with the high-interest savings account and a cash ETF, depending on your goals. If you want something creative, print on demand is a great way to build an asset that can sell while you sleep. If you want long-term income, dividend ETFs can build a growing stream over time. And if you want the core long-term wealth strategy, broad market investing with dollar cost averaging is one of the most beginner-friendly approaches. The best choice depends on your situation. If you have no emergency fund, build that first. If you carry high-interest debt, handle that before investing aggressively. Passive income works best when your financial foundation is stable. There you have the 5 passive income ideas beginners can actually start. The big lesson is simple. Passive income is built, not wished for. You set up a system once, you automate it, and you give it time to grow. If this video helped you, hit the like button so more people can learn these beginner-friendly ideas. Share it with a friend who wants to make their money work smarter. And subscribe to the channel for more simple personal finance content that helps you build real wealth step by step.